Hi, everyone. I'm DeFi Dad. You're watching episode 44 of Yield TV. Hey, welcome back. It's Tuesday, December 8th, 2020. We are going to interview Tascha, who is a co-founder and the lead of Alpha Finance. So, Tascha, welcome to Yield TV. How are you doing?
I'm doing well, thank you, and very nice to be here.
Yeah. So I'm excited to learn more about this. I was just saying before we went live that I generally understand most DeFi mechanisms when they go live. I'd say I still struggle with Dodo a little bit, but like I love the result of it. It does a great job of allowing one to provide liquidity. Anyways, on the Alpha Finance side, I have found some of the things you do to feel like magic. So I'm excited to understand like the magic of what you all do with liquidity provisions and trading, and also the most interesting thing that we'll cover today. There's an opportunity to earn using your ETH, and that's thanks to like a collaboration with Aave. So that's something else that I think, most of us hold ETH, and anytime you can put it to work,
correct.
that's awesome.
Yeah.
But Tascha, maybe we should start with, your journey getting to Alpha Finance. And we were talking a bit earlier about how you started out at UC Berkeley. So can you tell us a little bit about your background, like how you got into crypto and eventually got into building Alpha Finance?
Sure. So as you mentioned, I went to UC Berkeley, studied economics. So I came from a more traditional finance background. And then I started my career in investment banking in San Francisco and then in London after pivoting to join Tencent as a product manager, and then pivot again to join Band Protocol as a head of strategy, and then left Band Protocol earlier this year to really work on Alpha Finance Lab and launch it with my co-founder, Nipun. So, the whole journey has been very interesting, from the very traditional finance to slowly, more techy and also more blockchain, and really dig deeper into DeFi. And I think what we found that's really interesting about DeFi is that there are so many market gaps out there. When in the beginning, when me and Nipun were building Alpha Finance Lab out, we wanted to pinch and hold on a particular problem, and then we find it really difficult to do so because the market moves really, really fast. So what we happen to do is actually, we think of several solutions, we bounce different ideas, and sometimes the solutions that we take on is actually, a combination of various solutions trying to solve, other problems. But at the end of the day, it's a lot about iterating and also a lot about listening to the market to make sure that we have something that address the unaddressed demand out there. So that's why we are building a number of products, not just Alpha Hamora. Alpha Hamora is just the first product that we're building, and all of the Alpha products will really work together to achieve main goal of maximizing returns while minimizing the downside exposure. And we think that's the ideal financial product suite, right? So that's what we're trying to achieve.
Yeah, I want to call out some of the similarities between Alpha Finance and like a yearn.finance. One of the things I noticed right away is that you're working on like a universe of products, which I didn't realize. I was looking at Alpha Hamora and I was like, this is really cool. And then I saw Alpha Finance and I actually thought you were two different entities, which I guess you are. But anyways, so there's that. There's also just what you were mentioning before, maximizing returns, reducing the risk, and also just automating. It's like you all are really focused on abstracting away the complexity, which to me just means deposit a token. Don't worry about other stuff. Just deposit a token or a few tokens. Maybe like a Zap in the future will enable some of it as well. But anyways, how do you all manage to do that? I guess like it's a lot of work, and feel free to tell us more too about some of the products that are coming, because we'll screen share live today, so everyone should stay on and we'll walk through these opportunities. But also was curious to know what else you're building.
Sure. So now that we have Alpha Hamora, we have expanded and grown very quickly. And now we're also building Alpha Hamora V2. So that's coming up. And then once we have launched Alpha Hamora, we also spotted a huge market gap. Without having launched it, you would not have seen or like felt that there's this huge market gap. And pretty much the market gap is that a lot of users want to maximize yield, of course, right? But they also want to make sure they are at a position where they are at market neutral leveraged position. What that means is that by taking leverage or opening a more than 1x position on Alpha Hamora, you may be exposed to shorting ETH effect. And I'm going to explain to you, on the behind the scene how Alpha Hamora works and how you may be, exposed to shorting ETH. So as a result of that, some users may not want to take that position, or even if they want to earn the yield farming APY, they would want to take the opposite leverage long on ETH. So at least they are market neutral while still earning the high yields, right? So once we saw that huge demand from our users, from our community to take that position, instead of offering this as another strategy to, leverage long on ETH for Alpha Hamora, we decided to take a step back and really see that there is a huge market for perpetual swap product, allowing users to take leverage long or short of any asset at all. So once we dig deeper into perpetual swap, we have found a number of unique angles that we can, contribute to DeFi space. So the engineering and the design mechanism that we are building, we have beta private testnet right now. So if you're interested, you can sign up for it. And, the design that we have built is pretty unique. I have to say it's not similar to other protocols in the space right now at all. And I think it will be quite an interesting game for us. So this new product is called Alpha X, and that is also coming up.
Is there a expected date for that or a soft deadline?
So we are going to share the access to beta private testnet in a few weeks. So the sign up to get the access is still open. And then the reason we have beta private testnet is really to get a lot of feedbacks from the users, because our concept and our product is quite different from other perpetual swap products in the space. So that's why we wanted to open it earlier to a group of users, to a group of community members to give feedback. And then depending on those feedbacks, right, we're going to iterate on it. And hopefully we would launch after we finish iterating on that.
Tascha, where would you sign up for that beta?
Okay. Yeah. So let me send you the link.
Awesome. And I'll share that then here as well.
Okay.
So why don't we do this though next? Once I've got that link, let's hop to the Alpha Hamora app, and I would love to talk through like some of the the liquidity pools, basically what you were just describing, because some of it might sound familiar, some of it might be over a lot. Some of the newcomers to the space, like some of their heads. So I kind of want to like try to dumb it down. The main reason is just understanding what risk there is, because there's you get excited when you look at the yields here that you can potentially earn. The numbers, are much higher than what you'd be earning in many other scenarios without using these tools. But again, just trying to understand like how could this potentially go badly, or what sort of risk am I taking on?
Yeah, so there are multiple users that can use Alpha Hamora. So if you are lending ETH, then there is, the risk would be similar to lending in other lending protocols, in a sense that if utilization rate hits 100%, then you would not be able to withdraw your liquidity out. But our interest rate model prevents it from reaching 100% or remaining at 100%. So that is not, something you should be too concerned about. So that's from the lending side. And pretty much you are not exposed to impermanent loss or anything from lending ETH. So you can earn, at super high. So, before I jump onto this podcast, it's about 10% of lending interest rate on ETH. So that's for lenders, right? And then there are also leveraged yield farmers, leveraged liquidity providers. So your risks are pretty much on two levels. So the first level is for those who are not, so for those who are not providing liquidity or you farming with more than 1x. So let's say you open like ETH USDT pool with 1x. So you are exposed to impermanent loss. So this would be similar to providing liquidity to Uniswap, SushiSwap, or other AMM protocols. Now, once you take on more leverage, that means that you are exposed to more impermanent loss because you are adding more liquidity to those liquidity pools. So that is something to keep in mind as well. Another risk, the second one, is that for those who also take leverage of more than 1x, what that means is Alpha Hamora would borrow the ETH on behalf of you. So pretty much you are able to provide liquidity with more from the borrowed one, right? So the risk there is also liquidations, in a sense that when ETH price increases significantly in relation to another token, then there can also be liquidations. But note that, so far we have quite limited number of liquidations that happen because of several things. Number one is that we offer quite a large buffer, in a sense that when users open the position, we have a buffer before you actually reach that liquidation number. Mm-hmm. So that's one thing. Another thing is that we also make sure to alert the users on the front end. So if your position value or if your health factor is red, then that means you better close a position or refill your position. So we're trying to also help you monitor that too.
Yeah, well, and also that actually brings up a point of tomorrow we're going to have the co-founder of the Ethereum push notification service on. So this hasn't gone live yet, but this is the sort of thing where when you use a powerful product like this, once we have those notifications, which you could alert someone based on their wallet address that they're like near liquidation. And so those are things that I appreciate, like the work you do on the front end there, but like, I think we're gonna be in a much better place here soon once we have notifications.
Yeah, that would be very helpful. Yeah.
Tascha, do you prefer, I can share my screen here, unless if you would be comfortable doing it, if you click the share screen on the bottom, I can share yours. Just
sure. Okay.
The thing that you'll want to do is just make sure it's on a wallet, of course, where you can demo this. Just basically just want to make sure you don't share like a private wallet is all.
Yep. Okay. Let me connect.
Okay.
You should be able to.
And then it should ask you to share a window or a tab once you click that.
Okay. Share screen.
Awesome.
Okay.
There you go. Cool.
See my screen. Okay.
Thanks so much. It looks great. Yeah. Could you first walk us through like some of these alpha pools and like APY obviously being 231% is a lot. First, what does IBEs refer to? IB ETH.
Okay, so actually a good place to start would be from these farm. And then after that, if I explain the alpha pools, that would make a lot more sense.
Do that. Yeah, that'd be great.
So for these farms, right, how these work is that there are a number of, right now there are 33 pools. Some of them are yield farming, which means that you're actually earning the farmed tokens. And these farm tokens will later be reinvested for you. So you can see here, they're all, for these SushiSwap pools, you're earning sushi. For DPI, which we just launched, you're earning index. Right now it's, 200 plus APY. So this is, high level yield farming pools. There are also liquidity providing pools in a sense that you are not farming anything, but you're getting high APY from, sometimes it's from trading fees, or sometimes it's from alpha rewards that we're giving out too. So how this works is that, let's say you select any of these pools, right? let's say I select this or DPI, which is the new one. Okay, so what it's asking you is how much ETH and DPI you want to supply. So this pretty much is similar to Zapper in a sense that if you provide only one token, then we would optimally and automatically swap for you. So you have 2 tokens to provide to liquidity pools, right? And then if you enter, let's say 1.75 x of leverage, that means that you are borrowing some ETH from Alpha Hamora. So in a sense, let's say if I enter in the beginning as 1 ETH, and then I click 1.75, this should be borrowing 0.75 ETH for me. So technically what that means is I am farming index as opposed to, I'm farming index as if I have 1.75 ETH, when reality I only have 1 ETH. So that's pretty much, how it works. And
what you just mentioned there, so is that we're starting with 1 ETH and then you're splitting it into the DPI and ETH LP, and I end up with, in this case, I'm technically starting with 1.75 ETH.
Correct. Yeah. Okay. Now let me show you this one too. We have a pretty extensive document explaining Alpha Hamora and also where does APY come from for each pool. So let's say here, this is a generic one. What this means is if you select any of the pool, right? Let's say DPI ETH, so you can supply any of the token or both, and then you tell Alpha Hamora how much leverage you want to enter at. So in this case, it would be this 1.75x here. And then depending on how much you're entering in terms of leverage, right, it would borrow the ETH for you. So you have more, liquidity to provide and yield farm. And then let's say I take, for instance, I take 2x and I supply 1x. So that means it's going to borrow 1 ETH from me. So I would have 2 ETH. And then what it does for me is that it would take these 2 ETH and then swap it so I have equal value of both.
Yep.
And then it would be supplying to liquidity providing pool, in this case, ETH DPI on Uniswap. After that, Alpha Hamora would get LP token. So you need V2 LP token. And then Alpha Hamora would automatically stake into liquidity mining pool. So this would depend on which pool. So let's say for ETH DPI, this would stake into the index co-op.
Right.
So you can actually get index token. So this whole thing is what's actually going behind the scene. When users actually don't have to worry all of that, you just come in, select which pool, and then select however much you want to supply, and then you select leverage.
That is really cool, that setup there. I mean, that and that's a great explainer of how it works. So, I mean, essentially, it lets you, like what leverage is supposed to do, it increases your position size, letting you earn more. It also, at the same time, like if you were trading on a perpetuals market, this is where people worry about potentially being liquidated, but this is low leverage we're talking about. I'm not, by the way, too, if anyone's watching this, is not financial advice. I'm not saying that this is then safe, but 1.75x is really low leverage compared to what you can get in the market. So, so that's cool. So let's see here. So one of these pools then gives you this IBEs, right? Is that, and then you can go to the alpha pools there and provide that in like a Uniswap LP?
Not quite. So IBEs would be earned from lending your ETH. So it's shortened from interest-bearing ETH. And pretty much, let's say right now, if you deposit your ETH or lend your ETH, you're getting 24.31 lending interest rate. And this is because all of the leverage that is happening from farm pools is being borrowed in ETH. So that's why, for all these farming, let's say farm 2x for ETH Link, that's why you would see total debt is in ETH, because every borrowing is in ETH. So the yield farmers are actually paying the borrow interest rate, and they're willing to pay this high borrow interest rate because they're getting more yield farming APY from the leverage. And they are also getting some alpha rewards as we're running liquidity mining program right now too.
Wow, that is cool. So basically, you created a lot products where there is an intense amount of demand for leverage or borrowing ETH, and then as a result of that, I mean that's a killer amount of yield you can earn on your ETH, 24-25%. That's incredible. That's such a cool, wow. I'm like kind of amazed this hasn't gotten I'm amazed like this hasn't just been talked about more, or it's just my own. I'm like, I've got my head in the sand on this, but that's so cool.
Yeah, so pretty much for alpha pools, right? This allows you to provide liquidity to this IBE alpha. So it works best if you have both. So you don't have to go through slippage or swapping of any of the tokens. So you can have IBE by lending on Alpha Hamora, or if you don't have IBE already, you can select this IBE alpha pool accepting ETH alpha. So what it does is it would automatically lend for you and then get IBE for you and then supply liquidity for you. So that's pretty much, separate thing from leverage yield farming. This is more of the IBE alpha pools that we launch on Uniswap to bootstrap liquidity in this pool.
Wow, that's really cool. I mean, yeah, now it all makes sense. I mean, you created a product that people need and want, and then it creates a demand for Ether, which is what we're looking at as IBETH, and then you're bootstrapping liquidity for that with Uniswap. This is really cool. Wow, that's so cool. I guess if we were to go back to the farming pools, anything you want to call out in terms of like categories of different opportunities? Like I see the yield farming versus liquidity providing, and then also like what platforms are supported here?
Yeah, so right now we support Uniswap and SushiSwap. There will be more AMMs supported on Alpha Hamora V2, so we will share more about that. And pretty much what these means in terms of yield farming or liquidity providing is that the only thing that's different is for liquidity providing, there is no farmed tokens to be earned. So in this case, they're all like Uniswap pools that don't have, next layer staking to earn more rewards. So that's why you would see all the yield farming APY to be 0 here.
Wow. Yeah. I'm seeing too, like, I mean, there's the numbers on here are significantly higher than you would find elsewhere. Really cool. I hope others like take notice of this. This is like per usual too. Like there's sometimes we go on Yield TV and I know like everything inside and out. Then is like this. You can tell that I'm learning as we're talking because I'm like, that's wow. That's it's like open the tab, save it, leave it open forever. Okay, so one of the things though you mentioned here is that the utilization of if you go back to the earn tab on ETH, so if I deposit my Ether, once we hit 100% utilization, or if we ever hit 100% utilization, which this is going to fluctuate constantly based on who's depositing and who's withdrawing. Technically, if we start at 100% though, I'm assuming like my ETH is locked, right? I'm not able to withdraw it.
Correct. Yeah. So similar to other lending protocols, how we implement the borrow interest rate model right now is it's a 3-step slope. So we call it 3-slope curve. And what it is that from 0 utilization rate to 80%, it will continue to increase. The interest rate for borrowing will continue to increase up until 10%. So, from 0 to 80%, that's the borrow interest rate that you're paying. So max of 10%, right? And then when the utilization rate is between 80% and 90%, it would be fixed at 10%. And this is because we believe that, optimal utilization rate should not be at one point, it should be at a range. So we want the utilization rate to be around 80 to 90%. So we fix the borrow interest rate to be at 10%. And then once it, exceeds beyond 90%, so the borrow interest rate would increase from 10% to 50%. So let's say, the gap between 90% to 100% utilization rate, you will be seeing interest rate to borrow increasing from 10% to 50%. So, all of these make sure that the utilization rate is high enough to generate high yields for ETH lenders, but also not, constantly at 99% or 100%, because we don't want ETH lenders to not be able to withdraw the liquidity out.
Yeah, makes sense. I think, this is something that we've seen with other DeFi platforms, and it always just signals like an incredible sort of product market fit, that like you've created something people really want and are demanding. I guess, okay, if we were to have a major correction, let's say like a 50% correction in the market, or even like the last few months, maybe you could just walk us through what have the last few months been like while Alpha Hamora was already live, but we did have, a correction where we saw pretty like major DeFi tokens fall by maybe 50%. And then I think Ether fell at most maybe by like 30%. It wasn't as anyways, any lessons that you were able to learn from that in terms of ensuring that Alpha Hamora lenders, that their funds are safe, and that that the mechanisms are working as they should, so that folks can potentially withdraw, or that you're attracting more liquidity so that there isn't a liquidity crisis?
Yeah. So definitely. So when we first launched Alpha Hamora, it used to be at 3x, and that's why we decided to reduce to 2.5, because it's where we feel a lot more comfortable, because it's 2.5x not only take into account the typical day of price volatility, but already takes into account the black swan event. So with all these leverage that we offer, maximum of 2.5, it would be fine. Even though there is another black swan event, which we hope there is not. So that's the first point. The second point is that the different level of leverage that we offer for each different pool also has a reason and rationale. So it's not just a random number that we decided that ETH sushi should be getting 2x, and that's different from 2.5. But we run analysis and make sure that we are comfortable with 2x and not 2.5 for this particular pool. And this is also why some of the pools don't have leverage. Let's say in this case, like ETH YAM or ETH Pickle, when we first launched, we also did not offer any leverage for ETH Pickle. So when there was an issue with Pickle Finance, our users don't get the impact from their issue either, because we don't offer the leverage. So pretty much all of these parameters have been thought throughout, and make sure that our users are safe.
Wow. Yeah. It's I just like, I keep going back to the pools, and I'm like, man, the numbers, they're really high. And I can see the pattern you're talking about too. Like the keeper token is much higher, but it's only 1x. Like you've left it as is, and I can imagine why. I'm imagining there's less liquidity, and I don't know. It's just it's probably less safe to offer leverage there than elsewhere. But this is something probably more from like a peer standpoint, just because I know how frantic it is for us with Zapper to update contracts, because pools are changing. So like yesterday, the index co-op moved on from, there was an initial pool. If anyone, I know you know this, but if anyone else doesn't, the ETH DPI liquidity provision would be staked normally in the index co-op, and then you earn the index token. Has that already been upgraded to the second pool, which was just launched yesterday, using this farm 1.75x? Actually, I'll just quickly share my screen if anyone's wondering what the heck I'm talking about.
Okay.
But, anyways, yeah, is that updated, Tascha, to the new pool?
Yeah. So let me share my screen.
Oh,
so
yeah,
you can.
Here we go.
Okay. So you can see that there are two DPI pools now because one of them is liquidity providing pretty much the old pool, right? We want to keep it still so users can still close close the position. But then there's also yield farming plus index right here. So pretty much those who already farmed from the old pool, they can close position in their old pool and then open the new position in the new pool. So it's a little manual right there, but migration is needed according to index co-op. But we offer two pools right now. So you pretty much can earn index from Alpha Hamora.
Wow, cool. And the new one is the one that is it's 199.86%. That's the newer pool.
Correct, yep.
Wow. Oh, cool. There's like so much in here. It's like hard to sift through. I guess, yeah, how do you think about the different opportunities in here in terms of like what you personally have exposure to? Like, how do you classify the differences? Like, I know one of the things that when I try to break it down for others, I'm like, what tokens do you want exposure to? I mean, that's the first thing. Like, don't go into a pool where you have to have exposure, you know, percent or so to a token that you don't want exposure to. Like the rewards in many cases might not outweigh what pain you might feel from holding that token. But if you get past that, I mean, there's just a lot here. So I don't know. I guess I'm asking like any advice in terms of how to filter through what might be a good fit for one's portfolio.
So I think the basic thing is, if you hold ETH, then it makes so much sense to lend the ETH here because of this 24.52 lending interest rate with no impermanent loss risk at all. So that should definitely be the first step, right? And then once you feel more comfortable using our product, you can look into farm pools. And I think this would pretty much be more related to what tokens you have as well, because even if you can provide one side liquidity, so even if you only have ETH, you can take a pick from all of these, but you would go through slippage as there would be some swapping that takes place. So maybe starting from the tokens that you have, so you can provide, two sides of the assets in the liquidity providing pool, bearing lower slippage. So let's say if you hold like Link and ETH, then maybe it makes sense to consider this pool first. And then after that, when you get more comfortable, then you can, expand from the pool that we have here, which is quite a lot, like 33 pools. So you can have, a lot of time digging deep into this. And one thing that I would like to mention as well, which is another use case for Alpha Hamora, and I think it makes sense too, for those who are using Aave already or considering to use Aave. What this is that we saw that there is a gap between the borrow interest rate on Aave and the lending interest rate on Alpha Hamora for ETH. So we actually make this simple front end for our users and for Aave's users to be able to earn from that gap. So what it is that, okay, you can see here that there is borrow APY on ETH on Aave. So this is the rate that you have to pay for borrowing the ETH from Aave, which is 1.25%. And if you borrow that ETH from Aave and lend it on Alpha Hamora, you would be earning 24.52. So, without doing anything much, you're gaining from that difference. So we just make it so easy for you. 3 simple steps again. So if you already lend on Aave, you would see the collateral value here. So you can skip to the next step, and then you can, click confirm on how many ETH you want to borrow from Aave, paying the 1.25 borrow interest rate. And then click confirm on the third step to lend ETH on Alpha Hamora, and then that's pretty much it. So we just make it so easy for users without having to go back and forth between Aave and Alpha Hamora. So that's for so that's for Aave's users. But for those who haven't lent on Aave, you can also lend it through here. So let's say in this case, my wallet, this one doesn't have collateral value yet. So we can determine which of these assets which Aave supports as collateral do I want to lend. And then once I select that asset, it will be used as collateral. So I would go to the next step to borrow ETH, having that collateral that I have just lent from the first step.
Wow, that is really cool. So I am let me get this right. If I have collateral already with Aave, I'll see that collateral value there. I
Correct.
can get a sense of what I can borrow here.
Yep.
And then I guess which asset and how much would you like to deposit? So like, what are the options there under which asset and how much would
Yeah,
I?
so these
Every,
are all the assets that Aave allows to be used as collateral. So pretty much once you lend any of these assets, it will automatically be turned on as collateral. So you can proceed to the next step for borrowing the ETH. Yeah.
okay, makes sense. And so Tascha, if I already had collateral in there, this is a step I could skip and I could just
Correct.
go to borrow
Yeah.
that ETH.
Yeah.
Wow,
So you can click next. Yeah.
this is really cool. I like, well, and that's my genuine reaction. We always catch up a few minutes before these interviews, but I I it's funny too because I was talking with I was just messaging a few weeks ago with Arthur 0x, who's one of your investors, and he was like, "You should check this out." And I always like I really respect him, and I think he's an incredible beacon, like as an investor in our space so far. Investors tend to push what they own, and so I gotta say, like, this is such a pleasant surprise to be like, now I get why he was so excited. There's just so much. There's so much here that empowers like the average user, and I think one of the things I really like is you've clearly explained when you need to, which like I would say this is something that maybe the average user might not be ready to use, but if you're the average DeFi user, these concepts are pretty straightforward. You're depositing, you're able to borrow. In this case, you're taking advantage of the difference between the borrowing rate on Aave and the ability to earn here in Hamora is so cool. Yeah, wow, such like so much magic here. I've like taken notes. I will have to participate in that too. Gosh, okay, so we covered earning on ETH is straightforward. That's just depositing Ether, earn at this point 24%. Someone could watch this later. The rates will fluctuate, whatever. Aave plus ETH. If you have an Aave position already, does it have to be Aave V1 or V2, or is it both?
Right now it's V1.
Okay, gotcha.
So, yeah.
Makes sense. Okay, great. And eventually I imagine it'll take some time. Right now, the migration to V2 isn't super easy. I think Instadap something today, a migration tool, but anyways, we'll get there. And I'm essentially borrowing against that collateral to earn more Ether here. We covered the farming pools. What about the swap? I feel like that's one thing here we haven't talked as much about.
Yeah, so this is just a functionality to make sure that you can swap your IBEs to alpha or ETH to alpha. And that's mainly because for the Uniswap pool that we launched, it's only IBEs alpha. So pretty much we are enabling the users to swap between these assets through Alpha Hamora front end. So pretty much it's going to be a lot easier for users instead of having to go through, withdrawing IBEs and then getting ETH back. So we just simplify things for users too.
Really, yeah, really helpful there. I mean, this is a lot of what we've tried to do with Zapper is, we have a DEX aggregator there, not because we're trying to compete with any of the DEX aggregators. Ours is powered by 0x's API. It's partially with convenience so that, your power users or even your new users can just do it all in one place. And there's a lot of utility here that you've put into like one place. Definitely happy I didn't learn about this before the ETH2 deposits for staking, because those rates are really competitive. Tascha, is there anything else here on Alpha Hamora that we haven't covered that you think is important for users to learn about?
One last thing, which is this status page. What it allows you to do, typically, in order for anyone to liquidate or reinvest, which I'm going to explain a little bit more on reinvest part, you would need to know how to code, and then you can do it through smart contract directly, right? But we want to make sure that anyone who's willing and wanting to do these functionalities, they would be able to do it too without having to know how to code. So that's why we have these buttons, so you can actually press and earn rewards from these. And what this is that anyone who click reinvest function is going to get 3% of this pending reward. So, these are the rewards earned or farmed from each of these pools. So let's say these are mainly all sushi, but then there should be DPI or pickle as well, index here, or MTA. So you are just weighing the pros, the benefits, and the cons. The benefits will be 3% of these. The cons will be the gas fee. So whenever it makes sense for you to click that reinvest button, then you will be able to do so. What it does when reinvestment happens is that Alpha Hamora would automatically sell these farmed token into ETH and then reinvest the whole process back. So this pretty much enables the person who holds the position or your farming position to earn even more from their position value because of this automatic reinvestment function. So this is something that anyone on the front end can also click and earn on this. There's also this liquidate buttons. Typically, people from the front end would be slower than the bots because there are a lot of bots, not operated by us, but by other people who are, keeping an eye on this, because they actually get 5% of the position value for liquidating these. So, but we have an option here. So if you are lucky enough to find an available liquidate button and you want to liquidate, then it's something that you can do too.
So those reinvest tabs, those are available to anyone. Like basically, if I'm willing to pay the gas on that, like that's just a reward that I can ultimately earn.
Yep. So 3% of these. Yeah.
Wow. Like again, more just like magic that I was unaware of. Like it's really, really cool. Like it kind of reminds me of would I be right to compare this to Keeper? Like the Keeper network, like doing something like that when you're reinvesting there, you're doing a work that I thought is it Keeper or the Keep? It's whatever Andre Cronje had launched. I mean, it's stuff that needs to be done that was done manually by teams in the past, and now you're incentivizing people to do it.
Yeah, I think this would definitely categorize under that too, because this is all automated and pretty much increasing the value for users.
Yeah, exactly. That's going to increase yield for everyone, but then you get a small reward from it. Really cool. Okay, one thing I was noting here that I hadn't seen is, do you happen to have any open position that we could see? And by the way, if I don't want to expose any of your own personal positions unless you have like a demo account like ready, but just was wondering, like, what does it look like when I'm trying to track whether my position is safe or safer versus like something that's at risk of being liquidated?
Yeah, so it would look very similar to this if you have a position open. So pretty much showing which pool, what's your position value, which means, like in total, your value of your position. So this would be dependent on the price of ETH and USDT2. So when ETH price continue to increase, you can find your position value to decrease. And that's mainly because from impermanent loss that you go through too. There's also this total debt. So with this total debt and position value, you can calculate what's your debt ratio. Debt ratio is mainly this total debt divided by position value. So right now, this person is at 72%. And the Q factor, which is, what debt ratio has to be to hit liquidation number. So it would have to be 80%, which means that your position value would have to decrease a lot more. to such a point that debt ratio would reach 80%. And then when 80% is hit, so when your debt ratio becomes 80, then that's when liquidation happens. So we also show it here in terms of Q buffer. So Q buffer pretty much, we also add a note on how it's calculated. And whenever this has become red, then that should be when you start to consider refilling your position or closing your position.
Yeah, it's again just more like sort of like magic to take advantage of. Okay, I'll have to, I guess, check this out later. Like, I was curious, like, do you see folks like running bots to do this or to liquidate these positions? Or I guess, like, I don't know if there's any way for you to track, like, are users actually just coming to the front end and clicking liquidate and taking advantage of that? That's one of the reasons I've never focused on liquidations. Is my understanding is that there's a lot more sophisticated people out there that are helping with that. So I'm probably, it's like a game that I'm just never going to win. But in this case, like, yeah, I guess, in other words, could someone more sophisticated be helping to execute these liquidations?
Yeah, so there are actually a lot of bots running. And I mean, we did not set it up, but we just knew because whenever we also try to liquidate as well, because we wanted to experience and take part on all user journey. And then whenever this becomes 1% or even less, we cannot click liquidate either, because there are a lot of bots running and they're a lot faster than us. And then the next time the position has already been liquidated and closed. But it's something that if the bots are not aware, then it's something that you can also do from the front end. And we make sure that everyone has equal opportunity on this, while the bots may be faster.
Some of the options that we've run through today, Tascha, in terms of gas, are these aiming to be more optimized than if you were to do it manually, or am I paying the same costs in the end?
So it should be lower than if you were to do each of these steps manually. So each of these steps is a lot of work. So you have to supply these tokens, approve it, and then borrow the ETH, take the ETH to swap, supply to liquidity providing pool, take out the LP token, stake, so all of these, takes a lot of gas. So what Alpha Hamora does is it reduces the gas fee for all of these steps too. But what it also means is that, if you compare Alpha Hamora to a typical, for instance, like a lending product, the gas fee for Alpha Hamora would be, higher because it combines a number of these steps. But if you were to compare it to doing all these steps manually yourself, it would be cheaper on Alpha Hamora.
Yeah, definitely sounds familiar to me, like with the zaps. Like we kind of run the same challenges. We keep finding ways to reduce the gas, but I mean, at the end of the day, like if you're doing 5 or 6 transactions for someone, it's still 5 or 6 transactions on the Ethereum network, and it costs something to do that. So let's see, Tascha, is there anything else on Alpha Hamora? I think now we've covered all of it. It was just that tracking of that I was worried about there. But anything else here that we should cover?
No, I think this is a very, full and comprehensive session on Alpha Hamora.
Awesome. And then I guess what else do you think? This could be what you're working on, but what else do you think is missing in DeFi? Like, what are you excited to still see built, whether or not it's something that Alpha Finance is working on?
Yeah, so I think impermanent loss has been something that been around for a long time, and a number of projects, a number of teams are trying to solve, haven't yet been solved yet, in my opinion. And I think this is something that it's roadblocking the growth of more AMM as well, and also more DEX in DeFi in general, right? So I think that is a huge market gap. It's something that we're working among our team to solve. So we're running a number of analysis and also making sure the parameters make sense before actually updating our community in terms of what design, what model we're working. But yeah, we should be able to share more those ideas not too long from now. But yeah, I think impermanent loss, insurance or hedging solution is definitely needed to bootstrap more growth in DeFi and also more growth for DEX trading in general.
Yeah, do you all have any strategies in mind for options, or do you have anything like in the works to enable exposure to options with Alpha Hamora?
So not yet with options, but more on the Alpha X, which is the perpetual swap product. So, when I first mentioned that we decided to, build out a whole new product to offer anyone to be able to open long, short, leverage position on any asset. That also means that users on Alpha Hamora who are taking leverage on ETH can actually take and open the opposite leverage long on ETH position on Alpha X. And when we launch Alpha X, we would also find a way to integrate to Alpha Hamora in such a way that it's going to be so easy for users to open the opposite position on Alpha X to make sure they're market neutral. So that's how we're thinking of solving this issue that you mentioned of options or trying to hedge and make sure they minimize the downside exposure. But now that you mentioned the options product, what we're looking more into, which is similar to the impermanent loss hedging or insurance solution that we're thinking of, it's going to be more around the options product. So we're going to share more on that, and it's going to be quite different from other options protocol available in the market again. So we are always going to think outside the box. So now we're just at the stage of validating the numbers to make sure that the model that we came up with actually makes sense.
So interesting. Yeah, so interesting, all that you're working on. I left the most obvious question for last. What is the purpose of the Alpha token, and what more can you share about that? Just what utility is behind the Alpha token?
So several points on this. Well, first point is that we see ourselves as pretty early in the days still. So as we continue to grow both project and products, Alpha products itself, we will continue to implement more and more usages and utility of Alpha to make sure that Alpha token will continue to be the main token to govern all Alpha products. So not just Alpha Hamora. With the current stage in where we are right now, the usage of token right now, it's governance token. So users can vote on snapshot.page. We also do a number of votings on there. So that's the current usage, right? But then when we launch Alpha X, which is perpetual swap product, we are also going to build in more utility for Alpha token. For instance, you would be able to stake Alpha token to ensure the security of the protocol in exchange for the trading fees. So that is, one of the things we're looking to implement. And then the third thing and the fourth thing are more down the line, but we already have planned for it. And I think it's just more of the timing when it makes sense, the best timing for the product and also the token itself. So the third thing is what we call work token. And what it is that if you hold Alpha, you would be able to use Alpha products better than if you were to not hold Alpha. For instance, if you want to open more than 2.5x leverage, you would be able to do so if you have Alpha. So that is what we call work token, because Alpha can do more work for you. The fourth thing, which we're also going to implement later down the line, is what we call interoperability token. And this comes from the fact that we are not launching only one Alpha products. We're launching a number of Alpha products. And even though each Alpha product is going to solve its own problem, capture its own market gap, it will bring synergy to all Alpha products. So it will still work together as an ecosystem. So, a short example that I gave is how Alpha X brings synergy to Alpha Hamora, right? So what this interoperability token or utility of Alpha is that if you want to, let's say, use this interoperability of Alpha products better, in a sense that you can click one click and you will be able to use number of products, you can do it with Alpha. So if you don't have Alpha, you would have to do it manually. Perhaps you have to go through multiple Alpha products to use and make sure they bring synergy to each other. But if you have Alpha, you can just do it through like a few clicks.
Interesting. Yeah. I realize you're such a new project still, and there's there's so much still to build and so much to release. Well, Tascha, I think we've just about covered everything for today, but I wanted to ask, are you all hiring? Just because I'm always getting requests from people about, looking for how to get into DeFi. So if you are, like, where can they look for those listings, or how should they get in touch with the team?
Yeah, we are always recruiting. And even though, the core team is based here in Thailand, we're looking to expand more globally. So no matter where you are, we're open. We're actually interviewing and talking to a number of people around the globe right now. So you can direct message me directly on Twitter. It's Tascha, TASCHA_PAN. And I'll be sure to get in touch.
Absolutely. And let's see here. I had one question here that just came up, going back to what we talked about before, but it's a good one. If one is doing, for example, yield farming with the Sushi Swap ETH DAI LP, is the reward the alpha token or the underlying LP token?
Okay, so there are two rewards. So if you are yield farming on Sushi Swap, you would be getting sushi, but with the reinvestment function that we have, which is, whenever a person clicks reinvest, it would automatically sell to ETH and then reinvest to your position value. So you will actually not get sushi token in your wallet because it has already been, invested back in your position. So everything is captured in your position value already. So when you close position, you have an option to take out, all ETH or ETH and DAI in this case. So it will already capture that gains from sushi. So that's the first part. The second part is we are running our own alpha liquidity mining program. So for anyone who is opening more than 1x leverage position, be it yield farming, be it liquidity providing, you will also get alpha. So this will be the alpha that, goes into your wallet, not reinvest back in the position value.
Got it. And let's pretend that someone hasn't clicked the reinvest and then I close my position, would I be walking away then with my position or whatever token I guess I started with, and would let's pretend it's sushi. Walk away with sushi and alpha then, or does the sushi get then, let's say, swapped for whatever token I choose to withdraw with?
So, these reinvestment function happens once every few hours. So let's say you open for a day, you're going to get reinvested quite a number of times. So that will already be embedded in your position value. But let's say you open for less than, a few minutes. And within those few minutes, there's no reinvestment happen. So in this case, you would not get that sushi rewards because there's no reinvestment that has happened yet.
Okay. Yeah. Oh, that's good to know. And that's something I guess you could check on the status page if you were really worried about it. That's interesting. That definitely makes me think more about, so like when I look at like the DPI, the DeFi Pulse Index, so the index reward that you get, it I believe could be a really powerful token someday because the index co-op has proven itself really valuable already. The DeFi Pulse Index is the most liquid DeFi index out there. But because of mechanisms like this that are on Alpha Hamora, I kind of think this is the future where you continually are reinvesting, and hence, in this case, you're selling that reward, which is putting selling pressure, let's say, on the index token. And why I could see, like, I kind of would like to see the index token go into the DeFi Pulse Index. And I guess with sushi, you can't worry about that just because sushi is doing all these different LPs and different rewards. But anyways, I guess my point is, I think the way that you all are doing it, it mirrors what are popular mechanisms in Y vaults and with Yearn.finance. And so, yeah, I think, this makes a lot more sense versus like me as a user having to manually claim and then either hold it or reinvest it. And I think a lot of us have tended to hold on to certain tokens. Like, it's not just because like we're speculating on the token we're holding. It's because we don't want to pay the gas, and we think that like the token could go up then, and we could skip time and effort of it. But that's really cool the way that you all do that with just sort of reinvesting. It's a very clever mechanism.
Yeah, but one point you mentioned is I really agree, and it's something that Alpha Homora V2 will take into account as well. So, as we continue to grow both product side and project side, we want to continue to bring more synergy to other projects. So with Alpha Homora V2, to share a little bit more on that is that we will allow the users to decide if they want to reinvest or not. So I think that would be pretty helpful. A lot of users don't want to reinvest. They want to, like you say, hold on to index token or sushi token or other tokens for other usages, right? So they have that option. But if they prefer to reinvest, then of course we would automate and make things simple for them. So that will also be on Alpha Homora V2 because we wanted to make sure it brings more benefits to other projects too, not only for just our users.
Absolutely. Tascha, actually, I keep having more questions just because I'm so into all of this. Where do you all draw inspiration from? Just because I keep making comparisons to Wire and Finance, but I guess what sort of could be builders in the space or people in our space, but could be outside of our space, especially talking about your economics background at UC Berkeley earlier. But yeah, where do you all draw inspiration from to build Alpha Finance?
So pretty much two things. First thing is what I mentioned briefly in the beginning is that when we first building our project out, we were trying to pinch and hold to a particular area, particular problem, right? And then what we found is that it actually limits our creativity even more. And you cannot just sit 10 hours a day and just think of that problem. Sometimes you shift to think of another problem, and then you come up to find a solution that solves both problems. So I think that's the model that we decided to take on from our experience from trying to pinch and hold to a particular area and a particular problem. So that's the first thing. The second thing is, Andre Cronje is someone we really respect, and I think he brings a lot of innovation at a fast speed to DeFi space. And I think that is someone who we inspired by, and also wanted to make sure that we continue to innovate and bring useful and innovative things to DeFi space, just like how he did for all of us.
Yeah. I can definitely tell from what you're all building. You're clearly enhancing, I think, some of the ideas that he brought forth. But I mean, this is its own product, and it's really remarkable all that you have built in such a seemingly a short amount of time. I never asked this, but when did you all start building Alpha Finance and Alpha Hamora?
So we started without going public or announcing yet, earlier, around early Q2, and then when we first announced official announced Alpha Finance Lab, it's more on late Q2.
Yeah. Wow. Yeah. And it seems like a lifetime ago, Q2, but it was less than a year ago. I mean, Zapper is actually less than a year old as well. So, I mean, everything's just accelerated so much over the past year. Well, okay. So we just reminder to everyone that Alpha Finance is hiring. You can go to alphafinance.io to learn more about this core team that's actually building all of these products. But then Alpha Hamora is what we talked through more today, and that's at hamora.alphafinance.io/stat, or I'm sorry, there is no slash there. If you go to alphafinance.io, though, there's a little button there to click into the app itself. You should follow Tascha on Twitter. You should follow Alpha Finance on Twitter as well. And I guess other than that, Tascha, we'd love to have you back. If you all have that V2 ready or when it is ready, please let us know. We could bring you on and quickly talk through it quicker than we did today, but kind of show off what V2 looks like. And would love to help people learn about all the cool stuff you're building. Sure,
definitely would love to share, and also bring more people to work with us, to build with us, collaborate with us.
Absolutely. Yeah, definitely feels like we should get some zaps going for some of the you guys have there. Well, please tell the rest of the team I said just congrats on all you guys have built, and again, would love to have you back sometime. If you hang out a minute, I'm just going to close out the show here. But just if you have any other questions beyond that. So everyone, just thanks so much for joining us again today. You can subscribe at tv.zapper.fi. If you follow us at yield_TV on Twitter, we stream it through Periscope on Twitter every day. Also, tomorrow we'll interview at 12 p.m. Eastern Harsh, who is the co-founder of the Ethereum push notification service. Full disclosure, I am an advisor on that project and an investor, but it's because I think mobile push notifications with DeFi apps are so important, especially with things like liquidation. So we'll be excited to talk more about that tomorrow. And other than that, I think we're all good to go. So thanks so much, Tascha. Thanks, everyone. Have a safe day.